Well, enough things were said by enough important people before the market opened today that the market finally had a bounce. Okay, but I want to emphasize that so far it has the absolutely classic look of a very typical bear market bounce. Okay, let's distinguish the basic difference between the two situations. A true bull market starts off slowly and ends with a bang. A bear market bounce starts off quickly, blasts up in other words, and then flattens out and goes on like that for quite a while. In other words, more or less ends with a whimper. Doesn't mean it ends low, it ends high, but it doesn't end with a bang. It ends by just petering out. Okay? That's what we had going on today. The market went up very quickly and then just stayed at that level for quite a while. Pretty much up and down a little bit, but pretty much through the end of the day. Okay? Bottom line is they were trying to get the Dow back up to 32,000. They did come close. Didn't quite make it. Once they didn't quite make it, and apparently began to realize that they didn't have enough juice, enough oomph to make it up there all the way again, they at least tried to hang on to Dow 31,900 and did manage to do that, but it was quite the effort to even do that. Okay, at times it even went below that level, they bumped it back up again. It did come down at the end of the day a little bit again, but they managed to bump it up a little bit again going into the close. So far it's holding up. It went up several hundred points today basis the Dow. They undoubtedly tried to get it back up to S&P 500, 4,000 again too. It would have taken more effort to accomplish that. They did not even come close. They did get above 3,900, but obviously given the lower numbers it takes more effort to get to the higher numbers. And given the much lower numbers than in the Dow, it takes more percentage increase to get to the higher numbers, and they didn't get there. Relative to the European markets, a quick note yet there too. I'll again use the German market as the reference point. If I remember correctly, I said on Friday they ended just above 14,000. They were absolutely determined to try to get above that number again, significantly above that number. They hung around 14,100 for most of the day, managed to pump it up at the very end of the day yet to get well above that number, though not to 14,200. In other words, make the end of day number look as good as possible again, even though it was actually only up at that number very briefly at the end of the day. Okay, also not a particularly good sign. So we'll see how long they can manage to hang on to this stuff before the next round of bigger bad news comes along again and overwhelms them again. Okay? Basically, what it sounds like happened today, and the headlines reflected this, so I am skeptical of how effective that was, other than very near term. The president, during his Asia trip, said some things that were taken as positive by the market in some very specific ways, as well as saying in general that he does not expect to see a recession. Okay? My reaction to that is, based on what I've seen from Wall Street in the past, is, oh hooray, someone important like the president says everything will be fine and we won't have a recession. Because they're in such an important position, they must be right, therefore let's celebrate. Unfortunately, ultimately, reality always overtakes such statements in the end, and that is all that ultimately matters. That is all that ultimately matters in the end, is what reality actually looks like, as opposed to what people want it to look like or expect it to look like. Okay? the best way I can put it is, even economists have forecast almost none of the recessions that actually happened because they didn't expect them to happen. In other words, not a very good track record. But the Wall Streeters were hearing what they wanted to hear, so they reacted accordingly. Unfortunately, ultimately, as I just said, always in the end, reality is what ultimately matters. And that's the direction we're headed. Okay? So, I also saw a quote from earlier today from headline, based on a quote from Ben Bernanke, the former Fed chairman during the 2008 crisis, who was apparently quoted as saying this morning, New York Times, that he thinks that the Federal Reserve will get inflation under control within a couple of years. Oh, hooray! Really? I suspect most people are focusing on the first half of that statement. Oh, we do expect that the Federal Reserve will get inflation under control. They weren't focusing so much on the second half of the statement. In the next couple of years, I can say pretty sure, pretty confidently, that most people, when they're dealing with a major problem, 2 months is a long time to them. Never mind 2 years. 2 years under circumstances like this is an eternity to most people. So saying they'll get it under control within a couple of years isn't saying much. But Wall Street reacts according to what they want to hear. Probably also reacts according to what the majority of the people want to hear. But again, it doesn't really match well relative to what's actually going to happen in terms of how human nature will play itself out in that context. So, it is the way it is. So we'll just see what the next few days bring again, and go from there. As I say, so far it just looks like an absolutely typical bear market bounce, but they aren't necessarily just one-day affairs, okay? So we'll have to see how long this one goes. Bearing in mind also, bear market bounces can have a more complicated form than an impulse pattern. An impulse pattern basically only has one form, okay? A bear market bounce can have 1 or 2 or 3 stages to it. The kind with 1 stage is far more frequent than the kind with 2 stages, and the kind with 2 stages is far more frequent than the one with 3 stages, stated in terms of absolute reality. You know, the one with 1 stage is far more common than the one with 2 stages, and the one with 2 stages is far more common than the one with 3 stages. Another one with the one with 3 stages is very rare indeed. Doesn't mean it never happens. And there has never been one with 4 stages. That's how rare a 3-stage one is. A 4-stage one has never happened. Okay. So we'll have to, would be just the first stage, it's just starting to bounce, so we'll have to see whether it's going to be the most common one, or the more common one, or the least frequent one. We won't know till we get there. I think overall circumstances will pretty much dictate the situation, but we'll have to get there to see what happens. So one other thing I'll mention it quickly is part of the reason also for the bounce today, and part of the reason for the positive talk, was the fact that the market during Friday was indeed, I should say, the Dow and the S&P 500. The Nasdaq was already down there to begin with, beforehand already, but the Dow and the S&P 500 were touching upon what is conventionally regarded as nominal bear market territory. In fact, the S&P 500 dipped into it during the day on Friday, but managed to close above it. As the headline said this morning, oh, they barely avoided a bear market on Friday, and hoorah, the market is now going up, getting away from that area again. For the time being, it probably will, but I don't expect that to hold. I don't expect that to last long. That is my basic point for now. So we will see how it transpires over the next day or 2 or 3, and go from there, and I will report as things develop. Talk to you soon.